Okay, Marlin, can you hear me? Yes, okay, great. It's up here. Okay, guys, thanks for joining me today. It's been a bit of a busy morning, as you've probably all seen with the market. But okay, so look, my name is Gagan Daphu. I've actually been a member of the room Top Tip for, I think it's nearly 4 years or so. I essentially manage a number of accounts. I've done so for about 13 years. I trade my own account. And about 3 years ago, I met Dr. John Papadakis, who essentially built this statistical model, which was for entries and exits on the market. I was essentially very impressed with it, with the data. So I essentially started using the data for myself and started building some accounts around it. And then at the same time, I was sort of sharing some of the levels with Danny and on Top Step and stuff. And then a few months ago, Danny said, look, why don't you start a room in Top Step, which is what we've done. And that's ultimately what I'm presenting today. So let me just do a quick disclaimer and then we can crack on. ES Zones research makes no warranties or guarantees in respect of its content. All the information provided is general commentary and does not constitute investment advice or recommendation. ES Zones research will not accept liability for any losses and arise directly or indirectly from use or reliance on such information. The risk warning: you're advised to conduct your own research before making a decision. Trading financial instruments carries a high level of risk, may not be suitable for investors. Before deciding to invest in any financial instrument, you should read carefully, consider your investment objectives, level of experience and risk appetite. You should be aware of all the risks associated with trading financial instruments and seek advice from an independent financial advisor if you have any doubts. And past performance is not a reflection or guarantee of future gains. Okay, so that's out of the way. So what is the ES Zones room? Well, very simply, what I wanted to do was take some of the data we had and put it in a very simple format, whereby it was concentrating on ES levels. We do have some research on some of the other indices, the NASDAQ and some of the main commodities like gold and oil. But as I mentioned, ultimately, the zones are based off this model, which John built. John is ultimately a physicist. He's a PhD in nuclear and elementary particle physics. He's used quantum mechanical principles in development of his model. In reality, no, obviously it's his IP. No one knows the details of how he does it. But as I said, I was using it and I was just so impressed with the results that I started managing accounts and using it for a lot of my trades. So we get a number of various bits of data from the model. Firstly, let's just click on here. We get something called entry zones. Entry zones are essentially a specific strategy whereby, very simply, you get an entry and an exit level. Okay. We also get something called DAX and S&P pars. We issue these, or John issues these, just before the open. So for the European stuff, they're normally out by around, I'd say 7:30 GMT. And for the US, anything between, let's say, 12 and 1 GMT as well. So you should have them around an hour and a half before the open. And then the other thing we get is model targets. These are essentially targets where we're expecting the S&P to reach, whether it's to the upside or downside. So let's go through all of these individually. Okay, so entry zones. As I said, these are specific areas with a well-defined entry and a stop. Generally, they can be quite tight. But for example, it could be 2900, 2905. So simply your buys at 2905 with a stop at 2900. The main premise, I would say, of this model is to really give you data where the instrument is likely to react. Okay, so what you're really looking to do is play the reaction. It's not really telling you exactly, right, we expect the market to go from A to B. It's basically giving you a high probability area where you're likely to get a reaction. Okay, now all of these zones are posted literally as and when. Most of them are posted first thing in the morning, but obviously as the market's moving around, they will be updated on the chart continuously. So what we have is, we basically say that the markets essentially have, or let's focus on the S&P. The S&P has a daily range, and we will have zones which are inside that daily range. So let's take this example. Markets range for the day could be 28.50, 29.12. Okay, let's say it's 70 points. Obviously, it may not move 70 points in that day, but those would be the edges of the range. So we then have zones within that, and these, you may have 5 zones within that. It may give you 3 or 4 buy zones, 3 or 4 sell zones within that area. So as you can see from the flag, let's take this example. Let's say the top is 3,000, the bottom's 2,900 to make it easy. Grey circle is the price. So let's say that's at 29.50. We may have a short zone above at 29.80, and we may have a buy zone below at 29.30. Okay. Your big area would be the swing short zone, which could be at 3,000, and your big area at the bottom could be 2,900. And these are all zones you could look to play. Some traders may wait for the edges. More active ones will try and trade the ones in the middle. It all depends on your strategy and how you like to trade, etc. But let's go forward and let's go and look what it actually looks like in real life. So actually what I've done here is I've basically pulled off today's chart and what's happened. So what you can see here is this is the chart that we share in the room. So before the open, we basically had these buy zones. We sort of divide them up. We have an orange buy zone, a white buy zone, grey buy zone, 3 areas. And again, the idea of this was to make it as simple as possible. So let's say, for example, you've been away from the markets for a few days. What I wanted to have was illustrated in a way that you could essentially come back and really methodically just go, okay, these are the zones today. These are the ones, these are the areas I'm going to look to do business. So this morning, this is a buy zone here, which is a blue line and a red line. The blue line is your buy, the red line is your stop. So here you can see very clearly 77.50, 74.50, 3 points. So we had a nice reaction up, pretty much to probably about 28.96. So almost 20 points, moved back, consolidated. We had another almost touch of it with a move up, and then we had this ISM number come out, and we had a decent fall. I didn't trade these in the morning because I was sort of preparing, but I basically traded this in the room. So, and I'll show you exactly how I traded this. But ultimately, this was the white buy zone, which we knew pretty much an hour before the open, and as soon as it pushed down there, essentially you could have acted on that with a move back up and scale down. But very crudely, that's essentially what an entry zone is: a blue line and a red line with your entry and exit. And as I said, I mean, later on today, if the market, you know, obviously in this environment at the moment, it can do anything. Sorry, did we have, has anyone lost sound? Or are we okay? Just check with Marlon. Okay, great. So yeah, I mean, these are the other areas still outstanding today. But as I said, you know, I couldn't tell you right now if this is going to go straight up or fall. But all I know, if I was just using this information, you'd basically be waiting on these areas. And as I said, this was the reaction to today, and it's ultimately it was enough. You know, you could have made decent money off that, and you could sort of finished up for the day. Obviously, most people don't, but that's what you could have done. Okay, so I didn't have any previous charts saved, but John had some of his. So let me show you his from a couple of days ago. His is a lot messier. I've tried to keep mine as clear as possible. But here you go. This was a couple of days ago. You see there, you had your red line, your blue line. Sorry, your blue line, your red line. This was your buy here. You had a decent reaction up. You had another reaction in this. This was the orange zone. Again here, this was another area here. Now, it won't always work as cleanly as this. Yesterday was, you know, a day which was probably a bit of an outlier where it actually went through a lot of zones. That happens, and it will happen on time to time. But on the whole, the majority of the time, you will tend to get some reaction. And as I said, all you're looking for using this data is not, okay, this is going to tell me the market's going to go from 29.46 to 91. It's just telling you almost the way John would describe it. It's, you know, if you imagine this was a tennis ball and it hit this zone here, using his methodology, data, he basically can predict that at some point this will run out of gas or exhaustion, and then as it falls, it will give you another level here where you're likely to get a reaction point. Okay, so you're not trying to predict exactly where it goes. You're just looking for the best reaction areas. And if you took over a longer period of time, you would probably find that your statistics are pretty good in terms of making money. There are various ways in using this data and various strategies, but what I'll do is I'll go over them quite clearly. But you, as I said, at the moment, all I really want to show you is the blue and the red line are your entries, and here is essentially the reverse. If you've got a blue line with a red line up there, you've got your sell zone. And I said, yeah, I think it was 2 days ago, it was pretty much it got very close to it before the big reversal. Okay, so let's move on to the other part of the research. Now, I've just shown you those zones. What John does is, again, to make it quite clear, this is today's path, actually. You have your price action. Again, he writes this at around anything between 12 and 1 GMT. So you'll have this almost sometimes an hour, could be 2 hours before the open. But initially, the view was using all those levels. He's tried to make it very clear. And this is not saying, okay, it will actually move there, down to there, up there. It's basically saying you would probably have a reaction there if it moves up straight away. However, you've also got this is your orange zone, which if I go back on that chart, well, I'll come back to that. This is another reaction area, but I essentially waited for this one here, which was the white zone, and this provided us quite a good reaction. Now, again, this isn't saying it's going to go straight to 29.49. It's just a projected move where you've got some sell areas. On the way up, you probably have some turbulence, but that's essentially what you get in the morning. So you can prepare for your day. I tell some people who are relatively inexperienced, who try and trade all those little levels, I say, look, the best thing you should do, print this chart off. If you want on your own platform, put these levels onto your own chart and wait for those. And really, on most days, just look to buy these two zones. More often than not, these two zones are good entry points. I know one guy, all he does is he basically buys this one, this one, and this one, I forget his exact strategy, but I believe he trades, and he gets larger the lower it gets. And statistically, again, I haven't got the exact stats. He makes money more often than not. However, there are days where he may not get a trade because it may not hit these zones. That's just the way it is. But it's a relatively low. I'd say that the labour involved is a lot lower than trying to look at your screen all day, trying to catch every tick and looking at the way the market's moving. It's a low labour. It's not labour intensive compared to a lot of other trading. That's how I put it. Okay, so this is actually a screenshot of the PDF. As I said, this is what you get every day. This is posted as a link in the room, but I also email it out as a PDF every day. So as I said, we give a little summary here. For example, again, this is the S&P consolidated today's European session. We were expecting a move up, blocked up to around these levels. That's 29.12, sorry, 29.05, 29.12. And then he was expecting or a dip down there. But look, you can read that yourselves. There's your chart. Now, all of his data, because John's based in Europe, his data is based off a CFD price. So on the chart that you get, I've converted them. It's a live ES chart, but this data here actually is S&P prices. But we basically put the difference or the variance that it is every day there. But today, for example, here you can see the range today was 28.60 to 29.12. And look, it's going to plan today. Okay. Another part of the data, I find this very, very useful, is something called model levels. So from John's levels, you got your entry zones, and then you got bigger picture targets. These can be on the downside or the upside. Again, these are sent to you every day, and they'll be updated. I've put two here just to show you. This was yesterday's. This is today's. Now, on here, yesterday morning I came in. Obviously, we were sitting down at 29.40. It was, we weren't quite sure if it was going to push up or down. The first thing I saw was, okay, downside targets, 29.27, 23, 28.92. This doesn't tell us when they hit, but the way it was moving yesterday, I was suspecting that we could start hitting these zones. And actually, I think I tried to take a couple of trades once these had been hit. Obviously, the market was a bit more violent than I was expecting. It did move lower, and we fulfilled this. But as I said, this gives you an indication that the market is going to move a bit lower at some stage. We've also got these upside targets. Now, these would be in a darker black if they were live. When I say live, the market has to be bullish. Can you see here? It says model bias, neutral, 28.01, 29.54. This is the range that we're in at the moment. If we push above and have a day close above 29.54, then these targets will be live. However, at the moment, we could push all the way up to 29.54. This could be the top of our range, and we could fall all the way back to 28.01. Okay, so this is another area you want to keep an eye on. Again, what I do in the room is I try and explain to people how to use this data because it looks a bit overwhelming from time to time. But it's quite important that you do use all of this data. I said, look, you could simply just look at entry zones. Yeah, you could say, right, I've got 3 entry zones today. I'm just going to wait for those. Or you could take it one step further and use more of the data that's around. And that's what I do. And I find it does help. This is another bit of data here, the volatility levels. Again, I find these very useful. These are produced after the first hour of trading. So after the first hour of trading, and you've got a bit of a range, it will give you some expansion targets, the upside and downside. Let's say today, market has a big downside move later. The chances are, when it does spike lower, either one of these levels may give you a reaction. So what I would do is I'd combine these levels with the entry zone levels, okay? So let's say, for example, your gray path zone or the white path zone, which is the one I did today, if that matched with one of these and had some confluence, it gives me a bit more of a bias that that's going to work, but I'll come to that. Here, these are very interesting. Yesterday, markets, it's a bit like a, I wouldn't call it like a stochastic oscillator or an RSI, but for example, this morning, we came in and this oscillator, his proprietary oscillator is down at 21. The weekly is down at 23. I've seen these go lower, but you're getting close. And again, it's a bit like, I would look at this, the fact that it's at 21. I would look at the fact that yesterday on the put-call ratio, we spiked quite considerably. I would look at the fact that these targets on the downside were completed. So all of these things are building up for me to think, okay, we're probably close to the market bouncing, and I would use some of that information to start building longs, etc. Okay, so let's go to the next chart. Now, here's another thing that John tends to do. He uses some of those targets. Let me just go back one. These targets, right? And then he compiles something called a fractal. Now, this fractal was from the last sell-off. And I remember at the time he produced this fractal. This was the one here. So this ultimately is sort of a market moving in a certain fashion. I don't know the exact time. He will then say, okay, markets has a similar setup. Using his levels, he will then, project some move. And I caught the majority of this pretty much just using this data. Obviously, I was in and out, but I was able to capture a lot of the move. In my experience, what used to happen was, you'd have a leg down, people would draw fibs, and they'd say, right, okay, it's retraced 38.2, 50%, 618, and I'm going to short it there because it's going to roll over because this is a head and shoulders setup. And all that happens is, you have a load of shorts sitting there. And I imagine, a lot of participants do look to do that. And all that really does is cause fuel for more upside. So as I said, here's another thing. You can't at all look at this and say, right, I'm going to buy this because John's saying it's going to 30.78. It'd be madness. However, it helps you. It's another part of your building up a picture. It's a bit like if you were looking at the market and you looked at the ES in the morning, you'd probably look at what TLT or the VIX or the DAX was doing or the NQ. So it's just one extra sort of bit of information. But as I said, for me, they would help me stay in the trend overall. So let me now discuss how the entry zones work. So we have our entry and stop, okay? Very simply, market moves down, hit your entry zone. This, by the way, is a 15-minute candle, okay? The strategy is based on one part on 15-minute closes. Okay, very nice and simple. You hit your zone, it works. Well, let's face it, in reality, it's never really that simple, okay? Because what can happen is this. Oh, well, I've been stopped. What do I do now? Okay, so to combat this, we call it spiking, okay? The entry zone, sorry, the stop has been hit. Happens to all of us. Stop gets hit, you get stopped out, let's say the low of the day, and then what happens? Starts going back up. So what do we do in this instance? Well, we look to rebuy. If this candlestick on a 15-minute closing basis wishes through your stop but closes back within this zone, this area here, this zone is still okay. So the strategy is to re-enter this on the next opening bar of the 15-minute candlestick, okay? Now, it sounds a bit technical, but actually once you get used to it, it's a good way to do it. So what do? You're essentially buying here, but your stop now should be lower than that low. And that is essentially your new entry and your new stop, okay? And that's your new zone, ultimately, okay? Right, so, okay, that's worked. You managed to get back into your position. You made money, great, okay. So, let's see when a zone is deactivated. How do we know? Well, obviously, very simple, that this 15-minute close below the stop outside of the zone is deactivated. If that happens, you wait for the next one. So obviously this morning, once it broke the orange zone, you essentially wait for the next zone below, which was the white zone, and you wait for that. Very simple, okay? Right, now this is something I did today, actually. Obviously the move down in the morning, once that ISM figure came out, was it was pretty extreme. So in that instance, what I look to do is this. I wouldn't enter there straight away. It hit the zone, but actually it went pretty deep into the zone, as we call it. So what I normally do is I wait for, I'm looking at the 1 minute candlesticks as well, okay? And what I'm doing is I'm waiting for that to turn green. And, you know, it might be that you're waiting for a few minutes, but it's realistically, you want it to settle. I mean, it could be the case that, you know, you could be using something like a footprint chart or something and matching it with this. And that could help you and be like, right, we're in the zone. I'm waiting for the footprint chart to turn up, or whatever you want to use. But for me, it's just literally I'm waiting for that 1 minute candlestick to start going green. And then I think, right, okay, I'll buy it here. That's my new zone. And again, look, technically speaking, that should be your zone. Again, I would say I tend to continue to use the same stop and maybe even slightly deeper on occasions, but that's me. But as I said, you could use it in that fashion. And as I said, that's really what you want to be doing when there's violent moves in the market, because otherwise you end up getting it here. It could go all the way down there, stop you, reverse up. But as I said, you'll get the hang of it over a period of time. You'll do what works for you. It may be the case that you want to use a slightly wider stop because you don't want to get stopped and have to re-enter. It's totally up to you. But remember what this is telling you, these are areas where you're going to see some reaction, and it's a highly probable area you're going to see a reaction. Okay, let's move on. Now, there's another area of information that we have. If you recall back to the model table, I mentioned volatility levels. These are levels which have been produced after the first hour of trading. So what you can do is if one of those levels is within a zone, you can actually wait till that's hit. These tend to be good reactionaries. You could essentially use that as your buy, and then you have an even tighter stop loss, shall we say. Again, you want to combine some of these volatility zones, but as I said, if you're not sure and it sounds a bit complicated, I'll be in the room to explain it, and I'm taking these trades as they come. Okay, sometimes you have a volatility level above the zone. In that case, sometimes you'll see the price react above and you're waiting for it to hit the zone, but you can enter here, and then that's your new zone, okay? And you just adjust your position size. You know, if you've got a 2 or 3 point stop, your size is going to be bigger than if you've got a 5 to 7 point stop, okay? Again, the same applies for volatility levels below the zone. A lot of the time I find you'll have a volatility level just below the stop. What I do is I always take that into account, and actually I put my put my stop not always that much below, but just below that volatility level. But as I said, you could just wait for that area to buy, or you could buy in the zone with your stop below that volatility level. But these are all small details how you'll pick up over a period of time of how to use the model. Okay, so as I said, it's relatively straightforward. We've got a chat room. All of these zones are also automated through a Slack application. So that application I'll go through, but it can be on your phone and it can be on your iPad, it can be on your desktop, and it will just give you alerts every time zones are hit. So every time it hits a white, orange, or grey zone, it will give you a little message saying zone hit. Okay, you obviously know what this looks like, but this is what the room essentially looks like. Here you can see I was sort of commenting that the white zone was approaching. This is the bottom of the daily range. I was saying wait for a reversal. So there was a little volatility zone below the stop. And then I said, okay, buying the white zone 29.58. Stop was at 59. I had it just below that because I thought, okay, the market's still quite volatile. And then what I did was after 4 points, I cut half of it. And here's what I would look to do is I would, depending on what size you trade. I mean, this is quite good with micros now. I mean, let's say you traded 4 micros, you could take half off, go to break even, leave 2 on, and then as it moves up, this had moved up 9 points, take another one off, or another 2, and leave your last one as a runner. And that's essentially what I did. I took 2 off, 1 off at 67, and then 1 off at 74. But as I said, looking at that today, you could have bought it there. I didn't do that in the morning, but you could have had an entry there, an entry there, and an entry there. Like anything, it always looks great in hindsight. It's not always this easy. Yesterday, we had a day when it did go through a number of zones, but I'd say that's an outlier. But as I said, over a period of time, the best way of using this information is you get your PDF in the morning, you look at the chart, and you basically have these 3 areas where you're looking to buy or even sell this one. I've tried to have less zones on this to make it as clear as possible. But it might be that during the session we get new zones and I'll add these on and I'll keep adapting the chart as the session progresses. Okay, what else? Okay, this is the Slack. I don't know if anyone's used Slack as an application. As I said, it will look like this. You'll get a little alert. This blue here would have been the long zone. These would be your short entries. And as and when they're being hit, it just gives you an update. Straightforward. There's a little guide we've put together which explains everything I've said here. It shows you how to use the zones, etc. But as I said, the main ingredients that we have are let's just go back. You have your model, which gives you your zones. You have your strategy, how to buy them. As I said, you pick whether you want to take small zones or swing zones, etc. And then you have your risk management, because essentially the model will give you the stops. Okay, so the subscription plan is ultimately $2.25 a month. You get 2 daily emails, so it's 1 bit of research in the morning with the European stuff. You get 1 in the afternoon with the USA stuff. That's emailed to you. It's also on the room. Obviously, you have the chat room. You'll get the live alerts to your phone or your desktop, wherever you want them. I do some of the trades in the room. And what else? And you have your targets, etc. What we're offering is 7-day free trial. I would suggest, if you're interested, take the trial. First month's 20% off, but as I said, you can see how it's like after a week, and take it from there. And if you have any questions, we can go back through the presentation and go from there, really. Marlin, anything you want to add? I think Marlin's just put the link up. what we can do is I'll go back and I'll share my chart. We can see, let's have a look. Well, actually, the chart's on the ES anyway. But yeah, any questions at all? I'll give you a few minutes. But the room will be open from now till Friday anyway. But if you are looking to at least take the trial, contact Marlin through that web link, which is posted. As I said, it's free for a week. It's worth taking a shot and see if you like it. As I said, I use it myself for trading my own accounts. And that's it pretty much. But look, thanks for joining me. And as I said, I'll be in the room. So if you want to ask me any questions, we can take them from there. All right. Okay. All right. Cheers, guys.